Hi, everyone. You're watching episode 64 of Yield TV. Hey, welcome back. It is Monday, January 25th, 2021, and we're going to kick off this week with a special interview with Chris, who also goes by Spadaboom of Badger DAO. Badger DAO was launched a few months back. It's been a remarkable project to watch grow over the last few months. It is a DAO that has been, to sum it up, it's a DAO that's been focused on bringing Bitcoin liquidity to DeFi. And they've been very successful at it so far. And they recently launched a rebasing pegged version of Bitcoin. And so we're going to talk about that product today, Dig, as well. But on that note, Chris, welcome to Yield TV. How are you doing?
I'm great, man. Thanks for having me.
Thanks so much, man. It's an honor to have you join us. I know you guys have been crazy busy the last few days. And I think we were joking before we just came on. I'm like, have you slept the last few days? And Chris was like, I haven't slept in like 2 months, man. So no big.
You know what's funny, man? It's like I've done a few interviews in the last month or so, and anytime anybody watches the interview, their comments like, "Wow, that guy looks tired." And I'm like, "Thanks a lot. That like makes me feel amazing."
Yeah. Oh, that's funny. No, I don't think you look tired, but I know myself. Dude, last week I went to bed at about 3 o'clock every night, and it had nothing to do with any sort of like, last minute assignment work stuff, just the usual stuff that might keep you up late. I was just up because it's hard to sleep. It's hard to sleep with all this going on. I was digging into Dig and trying to understand like all the different opportunities that there are there. So this will be fun. Why don't we start from a broader perspective of, what's your background in crypto? And then what led you ultimately to co-found Badger DAO?
Well, I've been a Bitcoin and crypto enthusiast now for about 8 years. I got into it because I was living in New York at the time, in 2000, late 2013, and my office was on top of the original Bitcoin Center on Wall Street. I used to sell like hardware and software to like enterprise companies. And a buddy of mine from college moved out to Long Island, and he was like, "Dude, we got to go down to this place. It's right below your office. You can buy and sell Bitcoin. This Bitcoin stuff's really cool." And he was like my best friend. So I was like, "Sure, man. Like, let's do it." And we would go down there, and guys would be in bow ties, standing on top of tables with an Excel spreadsheet, in their background. And that was the order book. And they were doing live auctions, you know what I mean, for Bitcoin at like, $100, $300. It obviously was going up and down around that time as well, but nonetheless, it was pretty crazy. And then over the years, I just stayed involved as a holder, investor. Being from Toronto, there was quite a bit of buzz around Ethereum when it launched, of course. So I was involved in those times as well. And then over the years, I was focused more on building community, helping different projects launch, and more of a passive investor. And then in late 2019, I decided I wanted to have more of an impact on the space that I've grown to love so much. And it really started with trying to identify ways to build financial products for Bitcoin on the Bitcoin network, interesting enough. And I quickly realized that was very difficult to do, with the state of the Bitcoin network today, and the ability to build on top of it, and interoperability and things along those lines. And of course, Ethereum has the biggest developer mindshare and the biggest infrastructure for building applications on top. So that's really where the focus shifted. And it was really me and a few friends that also been in the space a while. And we decided, we want to do something different. We want to be focused on Bitcoin, obviously, but we also grew to love this idea of like a truly community-owned, digital business, open collective that, back in March, April, companies or projects in the space were starting to really gain some traction around. And that really caught my attention because, that's what I believe in. I believe that is the future of business. And I believe that every community member should be involved in every decision with complete transparency from the get-go. And that was really the inception of it. And we decided that, you know, a good product market fit potentially would be to have a yield aggregator product, to which the focus was tokenized Bitcoin. So we built our vaults. And funny enough, actually, you know, rewind that, we actually built Dig before the vaults. So we built Dig first, and
This is
then
the important part for
decided,
me.
you know what, it's kind of stupid to just launch with, you know, just random farms that people put tokens into, and money will come in one day and it'll be gone the next. Like, we really need to focus on sustainability. So we shifted gears, and it took us like an additional 4 months, and we built out the vaults, had them audited, you know, went through peer review, did all that type of stuff, ramped up the launch, and got off the ground. And that's kind of where it all started. And now really the focus is, how do we further build out this ecosystem, continue to really be focused on community-led initiatives, and of course, try and become the one-stop shop for all things Bitcoin and open finance.
Yeah, I tend to describe Badger DAO as kind of like a Yearn.finance, but focused on tokenized Bitcoin liquidity. And it's funny because the rebasing pegged Bitcoin that you have called Dig, that product being like your first idea, I agree. Like, if you would have launched that, I mean, you attract a lot of mercenary market participants versus building a community around an idea and having, you know, in this case, a governance token, which is Badger. So, Chris, I'm wondering, like, what products inspired you guys with Badger DAO? Like, who do you look up to and try to emulate with what you're building?
Really, our guiding post has been Yearn, in so many different regards, right? Like, you know, the quality of products that they've built in the code base. So from a technical standpoint, but the community, like, you know, I'm a Yearn community member. I've been a Yearn community member for a long time, and in my opinion, it's the best community in the space, honestly. And that's been our guiding post from the start, and it continues to be. And really, it's, you know, this idea of open collectives and community-owned products and projects, it sounds nice, but it's really hard, right? Like, we've seen a lot of that at Wi-Fi with all the different major decisions, even what's going on right now, how much conversation that's happened around minting additional Wi-Fi, and, you know, the people on one side versus the other. Like, you know, most instances in normal business world, you know, a team would sit in a boardroom and be like, yeah, no one's getting paid enough. Let's print, you know, in the stock world, you know, let's issue more stock, let's do a buy, do whatever the hell they do, right? But it's much different in an open, transparent world. So it's hard, and to see how they've navigated it. And of course, you know, our code base for the set vaults is built off of Yearn. And that also speaks to Yearn V1, by the way. But that also speaks to, like, there's a lot of controversy going around where people are against forking open source, you know, technology. And, you know, there's almost like this new guard and old guard type thing happening in DeFi. And I'm the believer of, you know, open source, that's like the foundation of open source technology. That's why it is open source, right?
Yeah.
It should have that ability to be built on top of. Now, to just fork something and then just call it a different name and do something, like, there's so many components that go into what makes, you know, a product and a potential business or project accelerate. It's not just the ability to take code and port it over here. There's so much to it. But for us in particular, you know, with DeFi being so young and the security vulnerabilities that you don't know what you don't know, right? That's how early this space is. So for us to look to, and we've seen examples of this in the market, but for us to spend 2 to 3x more time building the code base from the ground up ourselves, and then be in a position where we launch, and then, you know, obviously it would have been hard to determine this, like, you know, 6 months ago, but then to go from nothing to $1 billion in capital in your system in 45 days, like, without having battle tested code base, like, how could you feel confident in doing that, right? So, like, the ability for us to leverage, you know, Yearn's code and build on top of it is what it allowed us to accelerate to this point, to build a big community, to start generating revenue into into the DAO to be in a position where we can expand and grow this and potentially have a positive impact on the space, we wouldn't have been able to do that without that, foundation of code base. And the same thing with Dig, right? It's built off of Ampleforth's code base, which is the most battle-tested algorithmic stablecoin code base in the market, with 600 or whatever the number is, rebases, audits coming out of the yin yang, and everything you could imagine, right? For us to build that from scratch again would have potentially put us in a very precarious situation when you're trying to move fast and you're also trying to be innovative, So that's how I see it.
There's a very subtle line that I think this is where Badger DAO, where you guys have done so well, and that some people just don't get. It's about coming to the table in DeFi, in Ethereum, in crypto, and saying, how can we add value? How can we be complementary to what's there and work with everyone to grow the pie? It's a very subtle difference between, hey, we are here to launch XYZ, and to not acknowledge the landscape of everything else that is there before you that in most cases we all benefit from. And just by acknowledging and affirming, like what has come before you, how you want to work with the greater community, it really draws people in. Like that's the thing about you guys that I noticed a few weeks after, because you're watching it and you're saying, is this legit? Like it's hard to tell, because we're all worried about that rug pull. We're worried about an unintentional consequence where a team just isn't as competent and ends up with a disastrous sort of bug. So I guess I want to ask you though, before we actually show off more of the Badger DAO app, what would you say to others that are, I guess, refusing to build on Ethereum? Like you've lived that journey already of, hey, I want to add value and build on Bitcoin. You went through that journey and it eventually led you to build, Badger DAO. Anything you can share to help some people, to prevent them from wasting time, to take from the lessons that you've learned?
Well, I'm optimistic around where Bitcoin's going, but it's just not something that's good, the network in particular and being able to build on top of it. It's just not something that is close enough for people to start accelerating and spending their time now building on, I think.
Right.
If they're, if they want to bring a product to market and have that product be used by thousands of people, it's really just not there yet. But I'm optimistic. Bitcoin and the people building on Bitcoin are some of the smartest people in the world, so definitely can't overlook that. And what they're doing with check template verify and a variety of other implementations there, it's exciting stuff. But nonetheless, the fact of the matter is, in my opinion, there's nowhere else to build but Ethereum today, right? Like people talk about ETH killers and other chains. In my opinion, that's all nonsense. It's all garbage, because there really isn't a place where you can build and accelerate to bring applications to market and do what a lot of these applications have done today. And a lot of the applications that are getting a lot of attention, rightfully so, are decentralized finance apps, because they are really the killer app right now, and potentially one of the first killer apps on Ethereum.
Yeah.
So, I really don't see how people can even look to build on other networks where all the attention, focus, users, developers, integrations, everything is ETH.
Yeah.
So it's, that's just how I see it.
Absolutely. Hey, Chris, would you want to share your screen, or I can share mine? And I'd love to start.
You can go with yours. That'd be
Absolutely. Good. Here we go. Let me open this up here. Oh, one other thing. I'm going to just put this learn more at Badger, so they know where to follow along here. So here we go. So let's talk about the application that existed before Dig, and all the different vaults that we have here. And I'll let you sort of guide us through this, but from a high level, everyone, you would go to app.badger.finance. You can see, by the way, congratulations, you would see that they've exceeded about $1 billion in total value locked based on all of all the value that's been deposited into these smart contracts here. And what you see here are all different money Legos in DeFi that relate back to tokenized Bitcoin. So some of the more popular ones before DIG was launched were like the wrapped Bitcoin Badger Vault. We've got one of the ones that I had been looking at, of course, is Ether and wrapped Bitcoin, which you can do that on both SushiSwap or Uniswap. And quick reminder, you can zap into these on Zapper. So let me just open that up here. Here we go. If you're on Zapper, just go to pool. And if you look up, in this case, let's say I want to get into the wrapped Bitcoin Ether SushiSwap LP. You can go here, add liquidity using Ether, wrapped Bitcoin, or any of these other super liquid tokens. And then once you've got that, then you can actually stake that in the Badger app. Okay, anyways, I'll pause there a sec and go back to this. Chris, what else should we know about these set vaults, which are basically strategies for increasing your exposure to tokenized Bitcoin?
Yeah, so if you want to bring it up, I can go through a few of them, but for the most part, we just want to make it easier for the user. So this is where I think people, especially people new to DeFi, need to understand almost all of these tokens are LP tokens or liquidity provider tokens. So what that means is you would have gone to a DeFi platform or protocol, deposited an asset, in our case, something related to tokenized Bitcoin, WBTC, REMBTC, SBTC, etc.
Yep.
When you do that on these platforms, they will give you a token back. That's what the token we call is the LP token, because it represents your position in the liquidity pool. We then say, stake that token with us. Why? Well, we'll optimize the returns you're getting. So let's use as an example here, the WBTC ETH SLP token, the Sushi Liquidity Provider token. So if a user goes to this pool on SushiSwap and deposits into that pool, they earn sushi rewards. That's just how it works, right? They earn sushi rewards. What we say is deposit that with us, okay? If you deposit that with us, we'll now we have the rights to your sushi rewards. I use the word rights very loosely, but our smart contracts will be getting your sushi rewards for you. So what we do then is we take those sushi rewards, we stake them for you in X Sushi, so you can get even more APY. I think it's about 30 or 35% additional APY for X Sushi, which shares in the sushi protocol fees. And then we'll distribute that X Sushi to you. So you didn't have to pay the transaction, the gas fee to take the sushi, to stake it, to then move different things around. We do all of that for you. And as part of that, there's a small fee that we take, that the protocol takes, and that goes directly to the DAO for doing that service. And then based on what LP token you deposit here, there's all different strategies that we run. And that's really how it works. And today, once you deposit into a LP position with tokenized Bitcoin, at least, that's kind of the end of the road. You really can't do much with it at that point. And I think that's one of the reasons that Badger's accelerated, because it says, hey, it's just sitting there. Let us optimize it. By the way, you're the perfect exact user / community member that we want to help lead this open collective. So we're going to distribute Badger tokens on top of optimizing your rewards. And then you can use those tokens to govern this product or other products, any decisions around treasury, anything in relation to the actual collective or business, you'll be able to decide about. You'll be able to decide. And that's how we do it.
Yeah, it's taking, what you guys have done is very similar to what we talked about with Yearn. You're automating the ability to earn yield. You're making a strategy that would normally require someone to actively harvest like rewards, and then let's say in this case sell them, or in this case with sushi, if you're in the SushiSwap wrapped Bitcoin, wrapped Ether SLP, you would have to collect those and then stake those rewards. So it's making DeFi easy for folks, which is something that I obviously gravitate towards, and part of the reason I find this all so interesting. And I think it's the answer to how you guys have gotten to over $1 billion in total value locked. So we've got all those different tokenized Bitcoin offerings here. Two of the most popular that we called out, just to summarize here, were wrapped Bitcoin and wrapped Ether, which is right here. Again, this is something, if you go to zapper.fi/invest, if you don't have both wrapped Bitcoin and wrapped Ether, or you don't already have that LP, you can zap into it and just go there and search WBTC, and you can add liquidity. And then this is where you would actually deposit it to start earning those additional rewards. Let's talk about Dig, though. What is the idea behind Dig? This only launched in the last 72 hours. And then we'll talk about how you can participate in the farming.
Yeah, sure. So Dig is our second product. So what we're looking at here is our vaults. Dig is our second product, and what it is a rebasing Bitcoin. What that means is that the token supply is elastic. So what happens is every day at 3 p.m. Eastern, our system will look at the price of Dig versus the price of Bitcoin. And it will say, where is it? Is Dig more in USD value than Bitcoin, or is Dig less? If Dig is more, then across all wallets, if it's staked, and there might be some issues with this chart, by the way. I think it's
let me pull up coins, though. The other number.
But nonetheless, what it says is, okay, if Dig is more in USD value than Bitcoin across all wallets, if they're staked, if they're in liquidity pools, wherever they are, the token supply will grow based on the percentage difference between Dig and Bitcoin. Why would it do that? Well, it wants people to sell, because when they sell, it brings the price down. And the whole goal here is to be as close and as consistently close as possible to the price of Bitcoin. So right now, each Dig is worth 2.32 Bitcoin.
Yep.
So in 3 hours, if it's the same, the system will grow by 130%, right? It's 130% difference. Yep. Over a 10-day period. So what it will do is to say, okay, it's going to start moving there at 10% per day. So that means the entire supply, which I think is like 5,800 right now, or 5,400, something along those lines, will grow by 13% because we're in a positive rebase zone. Ideally, people will sell, and then if there's still demand, it may keep going up. It all depends on what the traders and the investors are doing. But then on the flip side, if Dig is lower than the price of Bitcoin, the supply will contract. And if you had 10 Dig in your wallet, and the price of Bitcoin was, let's say it needed to contract by 10%, you'll now have 9 Dig in your wallet, right? So you'll actually lose 1 Dig. What that's supposed to do is solicit people to buy back in their position and drive the price closer to peg, right? So it's all about, at a token level, how it can use game theory to better align the price with the price of Bitcoin. And really that's what Dig's all about. Now, I'll say this, as it relates to Dig and other rebasing tokens, a few folks have said publicly, well, it's very similar to Ampleforth, but pegged to Bitcoin. Like, what's the big deal? Well, that's where our vaults come into play, right? Like if you looked at those vaults between the liquidity positions and between the Dig only vault, there's almost 90% of all the Dig that's in the market in those vaults today. That does an enormous amount for the ability to drive stability in that asset. Why? Because those vaults take automated strategies. So today they're not turned on for specific automated strategies, but that's exactly what the team and different strategists are collaborating on right now, is that we will automatically run buy and sell activities for any Dig that's deposited. So once again, we make it easy for you. And in turn, if the majority of the supply is in those vaults will then have the biggest impact on the market and will better align the price and the peg. And that's one of the things that we're trying to bring to the table that's different from some other folks, right? You talk about the bond and coupon model and these fractional reserves models and things along those lines. We're not doing that today. Who knows where it progresses, right? The community may push things forward. All those parameters are in the control of the community. But nonetheless, we're going to be using vaults to hopefully drive that peg closer and maintain that stability. And then those vaults are also the reason we're able to increase the likelihood of composability. Because when you deposit DIG in the DIG vault, you get a token back called BDIG. Right. And it represents your share of the pool. That pool could rebase and earn rewards and grow or contract. Doesn't matter. You still own the same share of the pool. Now that BDIG token does not rebase. It's a standard ERC20 token. So in other DeFi protocols, in centralized crypto products or platforms, they can now accept this token and use it for things as collateral, use it for trading, use it for whatever. And between that and the stability, we hope that that's what enables DIG to maintain its value and use, in particular its utility, but also its ability to stay close to the price of Bitcoin.
Awesome. Okay, so I have tons of questions here related to just clarifying how all of this works. So to quickly summarize, if you're new to DIG, think of it like an algorithmic stablecoin, but instead it's for Bitcoin. And in this case, we talked about the price of DIG right now is about 2.32 Bitcoin, or around like 77,000, whatever it is. It's a big number. If one is holding DIG, they don't need to do anything if they want to just benefit from this rebase that happens every 24 hours. And so as long as we're above the peg, which we are right now at 2.32, we want it to be back at 1, the supply of DIG will increase. And if I've got DIG in my Ethereum wallet, I'll just see that number increase around 3 p.m. Eastern. In the future, if it goes below, I will see that supply contract, trying to bring the price back up to 1 Bitcoin. What we're looking at here, and we'll run through, there's 3 different options aside from just holding DIG. And this is thanks Gabriel Haynes, who's a DeFi educator and YouTuber, was kind enough to make these and put them up on Twitter. So this is one of the vaults where one could say, hey, I got DIG, and I would actually only like 50% exposure to this while I am providing liquidity and earning rewards. So in other words, they've got, and this is, let's say you have 50% DIG, 50% wrapped Bitcoin that goes into Sushi Swap. So you're now earning market making fees, but you're also earning Sushi, because Sushi Swap is rewarding the liquidity providers. And then you guys are automating the ability for that Sushi to be staked, which is called X Sushi, and that's generating more fees. The magical part about this is that one does not have to do anything here. You're just, once you deposit the Sushi Swap liquidity provision into your vault, which we'll go back to that in a second, all of this magic is sort of happening under the hood. So a follow-up here, Chris, is this 50% of the generated DIG is resupplied. So one is earning DIG while they are a liquidity provider of DIG, and that 50% of what you earn is actually being used to increase that DIG wrapped Bitcoin liquidity provision. Where does the other 50% go? Is that just accruing in your wallet, or do you go and claim it at some point?
Yeah, so you're spot on. So the active strategy on this vault and on the Uniswap vault is in the Sushi scenario, we're staking your Sushi for X Sushi, because as part of the Onsen program, they've incentivized this vault with Sushi, and then you can claim that X Sushi through our app.
Yep.
We also then take 50% of your earned DIG and we re-inject it back into the LP position. What does that mean? Is that we sell half of it and put it back in 50% DIG, 50% WBTC. So, and let's just remove the conversation around impermanent loss for a second, but not including impermanent loss, when you go to pull out your LP position, whenever that is, there'll be more WBTC and DIG in there because we've been constantly re-injecting it for you, right? But to answer your question specifically, the rest of the DIG will be claimable in the app. similar to that of Badger today. You'll
That's
now see Badger and Dig for the appropriate vaults. This is actually an older version of the diagram. With the recent proposal that was passed last week through governance, we actually decided to not reward these vaults with Badger, so they'll just be Dig. Although the same, dollar value and APY, it's just going to be Dig going there rather than Badger. So you'll be able to claim that Dig through the app, and then at the same time see the benefit of the liquidity position grow.
Makes sense. Makes sense. And this is a prime example of yield farming. Like, if anyone is new and wondering, like, what the heck is yield farming? This is it. You're earning multiple rewards using, normally it's multiple applications or money Legos, which all work together. There's like a symbiosis between all of you here. Like, if someone is providing liquidity for Dig, that's a goal that you all have set as Badger DAO, and they're being rewarded in this case with more Dig. But on the other side of that, we have SushiSwap or Uniswap, who both want more liquidity. And in the case of SushiSwap, they actually have a reward in Sushi that one is earning for that. So if it like blows your mind, like, I just want to like reaffirm, let it blow your mind, because like to me, it's incredible that like you can automate all of this now with what is money software that we call DeFi. So we're back in the Badger Finance app. And what we were just referring to, that diagram, that example is here, wrapped Bitcoin and Dig. Oh, I'm sorry. Let's go up. Wrapped Bitcoin and Dig. There we go. So the estimated ROI based on all those different rewards, you can see the breakdown here. That's where it comes from. These rewards, just forewarning, these rewards aren't guaranteed to sit at that rate, just because if the price of Dig goes down, that comes down. If you look at the impermanent loss eventually, there's chances there for one to lose value. So these are
the amount of Dig that's being distributed, right, could change. Like the community could say,
exactly.
You know what, let's bring that down to 500% or whatever. Right. Or the pool grows, right? So if the pool grows, people are getting less as well. So that's part of it also.
Absolutely. And I think one thing that's, this is so different than traditional finance is that, you can instantly see what others are doing just by looking at the total value here. So you can take a look and see that option one of just staking Dig, and you are earning compounding returns, which is what Chris was referring to as BDIG. But the BDIG is not being rebased. There's about 42 million in there. The second option, the wrapped Bitcoin Dig, there's about 18.7 million. And then the wrapped BTC Dig, and this is in Uniswap, there's about 16.8 million. So it's interesting to be able to look at those numbers and at least compare to something like this. There's a lot more value right now in the wrapped Bitcoin Ether pool. I would say it's probably a reflection of risk tolerance. There's a lot of folks that are LPs in that very large liquidity pool. I wouldn't, though, look at these as everyone's putting money into this, it's safe. Everyone's not putting money into something else, so thus it must not be a good idea. There's so many different variables here, and you should hopefully use this as a learning resource. And then you should follow up by jumping in the Badger DAO community in Discord, because you guys are very, very helpful there. So we covered the wrapped Bitcoin Dig. Here we go. Let me just zoom. This is the wrapped Bitcoin Dig vault, or the proper name is Set vault. And then we also have just below that wrapped Bitcoin Dig for Uniswap. They're nearly identical, except for you are earning, sushi rewards in the SushiSwap LP, but in Uniswap, you're not earning that. So just that's something else to take into account. Chris, anything else to call out with this this Dig vault? This was something where what you were just explaining, I deposit my Dig. I am now holding BDIG. That's the token I receive. I now own a share.
Which represents your share. So as an example, okay, say
Right.
so there's 42 million in this vault. Okay,
Mhm.
42 million, or let's just, yeah, you can even use the tokens, whatever. But
Right.
say you deposit enough dollars to equal 10% of that, right?
Right.
So say that's, 10% of that would be $4.2 million. So say you put $4.2 million, you're
Mhm.
going to get a vault token, okay, an LP token if you want to call it, very similar, and it represents 10% of the pool. So if
Right.
there's 10 BDIG in existence, you would have one of them, right? Because you have 10% of all the tokens that represent the total value of that pool.
Yep.
That's just sitting in your wallet. The same way that the WBTC ETH was sitting in your wallet from Sushi, and we said deposit it with us and we'll optimize it, right? Same thing. It's just sitting in your wallet right now. Ideally, we then want to work with other protocols to accept it for whatever the services that they provide. Example, being
Yeah.
able to borrow or lend against it on one of the major money markets, right?
There you go.
So
Yeah.
then you can then take that, go there, they automatically recognize it in your wallet like any protocol would, any app built on Ethereum. And then you'd be able to immediately qualify for some type of loan, for example, based on the collateralization ratio that they put forward. And that's the idea behind BDIG. Another example is in a few weeks we're launching an NFT competition with Meme, the second one actually. We did an NFT collaboration in December where we generated 6 NFTs, and we said to get these NFTs you have to farm them, aka you got to deposit on the Meme platform, and then based on how long you deposit and how much you deposit, you will be able to mint these NFTs. And that went really well. We had about 500 people today that hold those NFTs. The cumulative market cap of those 6 NFTs is over $1 million. We had a couple of them sell for $25,000 each. And I believe one of the reasons why that happened is because of the incentives that we put behind it. We said anybody that collects all 6 can come to the Badger app and claim a prize pool worth 1 Bitcoin. And that was kind of that extra layer of like, well, I'm doing this farming stuff, maybe for secondary selling purposes, for, collectibles, for whatever it is. But if there's an additional benefit, it's going to drive the buy and sell pressure for those people that are holding it or that want to hold it or need to hold it, maybe to unlock, the pot. We're doing the same thing with them again, except you're going to be able to use BDIG to mine these NFTs. And we're going to be launching that in a couple weeks. And that's going to be rather exciting because probably in the next month or so, we're going to be introducing some gamification measures to our app, where if you hold certain things or you've taken certain actions on chain and those are quantifiable, you'll be able to get different benefits in our system. So for example, if you hold any of our 12 NFTs in the wallet that you're participating on the app, you may get a 10% boost in APY, a 15% boost in APY, have first access to new products as they release before anybody else does or for a limited time. Things along those lines we're going to be introducing. So that's an example of using BDIG to do different things.
Chris, I have another question about the simplest set vault, this one where I deposit DIG. So normally if I'm holding DIG, I am being rebased according to whether we're above or below the Bitcoin peg. And that already just, I think I can say this without any sort of bias because I currently don't have DIG, and I've actually purposely been waiting if I'm going to have exposure to it just because of this interview. I wanted to make sure that I'm like being as objective as possible about how I'm looking at this. This DIG set vault. So if I hold DIG, I can be rebased every 24 hours. One thing that you noted earlier is if we're above peg, it actually, the rebase takes place over what, like 10 days? What I was curious about is let's pretend that we're supposed to have a rebase of, let's pretend that the supply is supposed to increase by 10%. It would increase then by what, around like 1% for 10 days? Is that the way
So
the
that's a little bit of the misconception. So you would, so the 10 days is a kind of a flattening mechanism, but
Yeah,
you can't just
right.
set what the measure was, and then say for 10 days, no matter what happens, it's going to do that.
That's
so
right.
Today, if it was 10%, right, it'll move 1% today. And then tomorrow, just think about it like the system checks and says, okay, is it still 10% above?
Yeah.
Or, if it is, great, we'll move another 1% towards that. The third day checks, it's only 5%. Okay, we're only going to move 0.5% there today. So it's a blend to smoothen out and flatten some of the aggressiveness that comes with, a rebasing activity. But to your point, all that happens inside of the vault. What I mean by that is if there's 100 dig in the vault and over 10 days it goes up 100%, right? 10% per day. Now there's 200 dig in that vault. It doesn't matter because you own a share of the pool. So if you own 10% because you put in 10 dig when it first started, and now there's 200 dig in there, when you pull out your assets, you'll get 20 dig back, right? You still own 10%. And that's one of the things that I feel some people have trouble wrapping their heads around, but when they do, they kind of get it. With rebasing assets, you own a percentage of the entire supply, and that's non-dilutive. So if it goes up or down or up or down or up, doesn't matter. You still own the same percentage of that supply. So really a lot of people that are more active with rebasing assets are asking themselves, where will this market cap go? Because if they believe this market cap will get to a certain point and they own 5% of that market cap when it's 10 times less, if it does get there, they'll technically have 10 times more money, even if they did nothing with their assets, right? Because they still own a percentage of the total supply, and the supply is a product of the price times, at least in how all the main websites determine it, the price times the circulating supply.
Got it. One last question on this, and then we can, I want to give you at least a few minutes to talk about products that are still coming, and then any sort of other risks to call out here. When we use this dig set vault, so let's pretend I deposit my dig, and now, as you noted, let's pretend I own 10% of that entire pool. And that's something, the idea is that B dig could eventually be used as, let's say, collateral on maybe like an Aave or Compound. The underlying dig, though, in the vault, is that all being rebased? Is that that's a humongous pool of rebase happening? It's just that I own a certain percentage of it, and you're giving me something that is, I think you're trying to give me something that's more understandable than watching number go up and down in my wallet, which is what BDIG is. So I just want to am I getting that right?
Yeah, no, you're getting it right, man. No matter where dig is, it's going to change every day, up or down, unless it's in that equilibrium zone, right? There's an equilibrium zone. If it's within a few percent of Bitcoin, nothing changes that day.
What's the equilibrium zone? What's the high and low of that?
It's 0.05% within each side of
the
price.
Makes sense.
But nonetheless, it's really about eliminating some of the nuances to rebasing and just say, you now have this token. And what's interesting about this token too, man, is it's an interest bearing token. So yes, it's your position's growing, but or shrinking based on the rebase, right? Number of dig that you'll be able to pull out, but you're also earning dig rewards. I think it's like over 280% APY right now. That's constantly being reinjected into your position and auto compounding, right? So getting you more and more of that pool. So if you're not in the pool, then your digs may be rebasing, but over here, your digs rebasing, plus it's earning rewards, which then further increase your percentage of the pool. So it's interest-bearing dig that's transferable, and then also has that exposure to the rebasing side of things.
All right. So just to wrap up on that, before I've got one last question, really just about what future products that we should be looking forward to in the coming weeks. But make sure I'm showing this. So there were the three options. There was the dig, which we spent a lot of time talking about, that set vault. Then we've got the two different LPs. Few things to just call out with this. I mean, first off, as with all DeFi applications, smart contract bugs is something that we aim to mitigate, but you should always be conscious of that, and you should plan accordingly. Like, what if there was a bug?
With that being said, we have insurance, or let's call them protection or coverage opportunities on both Cover protocol and on Nexus Mutual.
That's right.
I'm a big proponent for protection. Like you said, as it relates to DeFi, it's young, it's early. Every single person should get protection. And the community has incentivized that protection by giving Badger for those that participate in these insurance coverage programs, which in turn either gets them additional interest or makes the coverage free. Like literally, it doesn't cost you anything to get insurance. Like everyone should do it. Like everybody should do it.
Yeah.
And I think because of that message, Badger has grown to become some of the more, one of the more liquid protocols in terms of coverage on both Nexus Mutual and Cover protocol. Yeah.
And this is something I would say is fairly unique, even though it's an idea I think that's been talked about more recently. This was, I remember in like late 2019 thinking, just with Nexus at the time, because Cover hadn't launched yet, thinking like, God, like protocol should be incentivizing people to buy this, because it's kind of it's a way of protecting their users. So anyways, I thought that's really clever that you all did that. So we've got smart contract bugs that we're mitigating. The other thing to call out, these are pretty obvious if you've ever like been in a liquidity provision. So that's the one in SushiSwap or Uniswap. You can have impermanent loss. If you don't know what impermanent loss is, one thing I would suggest doing is going to croco.finance, and there's a simulator. So you can see if you start out with 2 tokens and let's say one token goes up 50% or 25%, or one falls 25% while the other one goes up. Play with the numbers and try to understand the fact that what tokens you put in, you might walk away without the same exact number of those tokens because they've changed in relative price. So nothing abnormal there, just want to like call that out. Chris, any other major risks though to call out? Pegged assets too. That's duh. Just if you have exposure to wrapped Bitcoin or any pegged asset, like even like a synthetic ether or a stable coin, just always be aware. A peg can fail. It is definitely something that we all think about. I would say it's less of something that you can mitigate the risk of, except for just holding less of that token.
Yeah, I was going to say that, and I was also going to say the platforms to which you're actually providing liquidity, right? So before you come to Badger, you have to deposit in a platform, and if there's some type of bug in that platform or any type of risk that's exposed, now we tend to only work with platforms that have extensive time in market, battle tested, tons of users, volume, obviously audits, things along those lines, and we collaborate with their team before turning anything on for the most part. So that's what we do to help mitigate it for users, but nonetheless, that's still obviously a risk parameter for them.
Yes. Any other risks to think of? I want to call out the rebasing itself. However you want to classify this risk. Rebasing tokens can be very, very volatile. So, reminder, this is not financial advice or recommendation or endorsement that anyone should get involved. This is meant to educate you on how this all works, and you can make your own decisions. If I buy DIG today, that token price can go up or down based on the usual sort of buying and selling pressure, but also there's this, call it an anticipation and then an actual change in supply that happens daily. So, I would recommend this. Watch it, just get on there and hop in the community, ask questions. And like, I've been watching the DIG price myself and just kind of like trying to like understand like what sort of human behavior are we seeing here. And it reminds me a lot of what I've seen with other algorithmic stable coins. So, you need some higher risk tolerance, I think, to get involved here. So please be careful. Anything else to add there, Chris?
From a risk perspective.
Yeah, from a risk perspective, I think we've called it all out.
Yeah, I think you covered
Yeah.
it, right? Like
Yeah.
overarching, extremely risky stuff, right? Like,
Yeah.
you know, just I don't know what else to say there.
And that's in relation
You
to
really do the. You need to have that foundation knowledge base. You need to spend the time. You need to be in these communities. You need to learn from people that are willing to share that knowledge.
yeah,
And you got to just, start slow, right? Like a lot of people get all nervous. Oh no, I don't want to miss the boat. Like this boat's just hasn't even left the port
exactly.
yet. You know what I mean?
Exactly. And we are referring strictly here to anything with dig exposure. I do think I don't want to classify the other opportunities there in the spectrum of like DeFi are really standard sorts of opportunities where one is providing liquidity, let's say for like wrapped Bitcoin in Curve. These are better understood money Legos. Rebasing is where I'm trying to call out more of the risk. So, Chris, last question. What other products can we look forward to? Is there anything else that's already slated to come out in the coming weeks and months, or anything else just that you can share that we can look forward to?
Yeah, really, it's an evolution of where we've gotten to today, right? I mentioned it earlier about being the one-stop shop for all things Bitcoin in open finance, and today on ETH. And that's really what the focus is. So, if you start asking yourself what people do with tokenized Bitcoin, that's what we want to offer inside of our app. So the ability to go from native Bitcoin into tokenized Bitcoin. So
Awesome.
a bridge, we're building that with Ren. And that's most likely going to be live in the next 3 or 4 weeks. The ability to go in and out of the vaults with one click. We can call them a zap. We can call whenever we want, but nonetheless, collaborating with you guys on how we build that into the app and introduce, really a quick in and out for users from a variety of assets. And then this next piece is really big. This next piece is what I hope really positions Badger and the Badger app to have more value for users if you look at the DeFi stack. So what we're going to be introducing is the ability to use your vault positions to borrow against it. So if you've taken Bitcoin and you've put it into Curve and you've put it onto Badger, and it's pretty much there. You can't do anything with it now. You almost couldn't do it. You couldn't do anything with it really until we turned it on as well to say, hey, put it with us. That LP token was stagnant there. We're saying we're going to unlock that value now. So whatever that value that you have underneath, in that case, the Bitcoin that you've deposited, we're now going to give you the ability to continue participating in DeFi by using that vault position. So for example, imagine you can now click a tab that says borrow stablecoin. You go to borrow that stablecoin and you just use the vault token that we've given you in your wallet that represents your share of the vault. And then, of course, we'll have subsequent things that you can do with it in our ecosystem. Hey, go provide LP on Sushi with the stablecoin in USDC. We'll have a vault. You can deposit a LP token in. We'll run an automated strategy for optimizing your yield. So that's an opportunity for people that are already in Badger to maybe increase their APY. But as well, we'll say, if you want to just get these stable coins, go to the super liquid pool and trade it for USDC. Now, wherever USDC is accepted or used in DeFi, in crypto in general, you can now use that. And I think that's really key for us to make that leap from just being a place where you can get the best APYs on Bitcoin to being a more integral part of that stack. So that's a big focus for us, and we hope to introduce some of these products in collaboration with a few cool partners. And then I'd say that the last piece, which technically is the first piece, but further expanding on Dig and introducing things like the stability vaults, introducing things like peg-based rewards. So peg-based rewards are going to be based on where the peg is. On all the vaults that we have, you'll get less or more rewards based on where that peg is. Why we do that? So we're essentially using the yield farming aspect to incentivize people to take a buy or sell activity on Dig. So it's like, okay, these $800 million worth of Bitcoin in the non-Dig vaults, you're going to get less Dig if the price is lower than Bitcoin. use some Bitcoin on the sidelines to go get dig into the positive rebase, and you'll obviously see the positive rebase and the benefits there, but then you'll also get more dig rewards as part of your emissions for depositing in Badger. So we're going to be using that as well, which we're going to be introducing in the next couple of weeks.
Wow. Yeah, really interesting. Yeah, you guys are you're building everything. I think the key takeaway is you're trying to make Bitcoin, tokenized Bitcoin liquidity on Ethereum that much more efficient. And, I can speak firsthand to the fact that anytime I hold something, I'm thinking about like, will I be able to collateralize this, borrow against it? Even if I'm not needing to right now, it has been a part of my decision process and exposure. Well, this token isn't collateral in Aave, so I'm not sure I would want exposure to it right now because I might actually need to use it as collateral. So yeah, just really cool to see that, and the one-stop shop mentality. Reminder to everyone too, we will have, it might be today, we were working on it all weekend, and hopefully we'll have out support for all of the different options that we showed there in Badger DAO. We want to enable one to be able to also stake, like what we were showing as a staking mechanism. When, let's say you are a Sushi Swap LP for wrapped Bitcoin and Dig, you'll be able to soon stake that LP from Zapper as well. And the idea is just what you said, Chris. It's at the end of the day, like, we're just one front end, you're one front end. The smart contracts you guys put forth, to me, like, that's what's really special. The strategies, the community, and all that. Your front end should be one of many entry points in the future. And that's what we're trying to do with Zapper as well. So reminder to everyone, you can follow Chris on Twitter here at Spadaboom1, which is like the best Twitter name. You can learn more at badger.finance. This video will immediately be available, so you can share it with friends as a recording to learn from. Chris, anything else that you think folks should know about?
No, man. I love what you guys do at Zapper. I love the type of content that you put forward, really, for people that are starting to get familiar with this stuff. Like, this is what we need, right? So Absolutely. Keep doing what you're doing. You guys keep doing what you're doing at Zapper. Like, huge fan, obviously. And of course, thanks for having me on, man. This is great. I love chatting.
No. Thank you. I know you guys are crazy busy. It's it's just exciting to see Dig finally go live. It's a radical experiment. Like, it's really it's going to be a hell of a story to talk about years from now. And hopefully all these products will just continue to build in that suite of Badger DAO. So everyone, just reminder, you can subscribe at tv.zapper.fi. You can actually try Zapper. So if you're involved in Badger DAO, you should be able to track all of those balances, whether they're staked or not, including Dig at zapper.fi. And then we'll have some new zaps going live, other than like the usual wrapped Bitcoin Ether SLPs and wrapped Bitcoin Dig SLPs and Uni LPs. So Chris, I'm just going to hit the off button here, but if you have any questions, I'll be in this green room with you in a sec. And everyone, also, I'm going to start DeFi class literally right after this. I just want to hop off and make sure Chris has got any questions answered. So hey, thanks so much for tuning in. Thanks, Chris. Everyone have a great day. Thanks, and man. For another live stream in like 2 minutes. Bye.